Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host and lead economist, Anthony Smith, and coming up, I'm going to give you a shipper Econ update. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet.
Hello, everyone, and welcome to your Wednesday carrier update presented by PowerFleet. I'm Zach Strickland. So if you haven't been paying attention to the weather, you probably should, especially if you're operating up in the Northeast. You see this big blob of blue right up there, headed all the way up through Pennsylvania, New York, all the megalopolis under high alert today and into tomorrow, where we're going to have a huge snowstorm. Of course, all you truckers out there need to know this because it is going to be a mess going up there. Make sure to check out Nick Austin's article on FreightWaves, as well as his video if you want to get deeper into the details of what's happening. But all you really need to know, anything in those red and oranges up there in those circles, watch out today. A lot of nasty weather heading up there, over a foot of snow. Even though that there's a lot of preparation up there, you guys well know, especially the ones that operate up there, that it is very, very difficult to manage a foot of snow over the course of 24 hours, regardless of your preparations and how well that you are able to manage it. So definitely be safe out there over the next day or so. Looking at the snowstorm into the future, we do have a little bit of predictive analytics in the sonar platform. You can see here in about 6 hours or so, that's where the bulk of the moisture is going to be positioned right over the top of Pennsylvania, Harrisburg, Allentown markets. Now, these are two of the largest markets in the United States in terms of overall outbound volumes. Looking at our outbound tender market share map, that is what the blue on the map over there represents. The darker the blue, the more market share that market has in terms of overall volumes. Some of the largest markets in the country, Harrisburg, 3.4% of the total outbound volume, as well as Allentown, Pennsylvania, sitting down here at about 2.3% of the total outbound volumes in the United States. Together, they represent over 5.5% of the overall volumes, second to only Ontario and Los Angeles, sitting out there on the West Coast, which of course has been pumping freight into these markets all year long due to a lot of the COVID pandemic, and now they're trying to fill up those DCs and get ready for retail peak season, which we are in the midst of right now. So this is a very ill-timed storm that's hitting this area, is the point of this. Because all this freight that's been moving into these areas, retail season is, of course, about consumers and consumption. The majority of the population sits up there in the northeastern corridor around New York City, New Jersey, etc. Not to discount all the people that live throughout the United States, such as myself, but population density, very strong up there. That means that there are lots of freight movement going on up there right now, as is represented by our outbound tender market share map. Now, looking at the volumes for Harrisburg and Allentown, let's see if we can see any trend lines forming. Look at this blue line right here. That's your Harrisburg outbound tender volume index. We have been slightly trending higher. If you look all the way back to October, middle of October, volumes have been increasing slightly. We did have, of course, the surge around Thanksgiving. A lot of shippers pushing that freight right before the holiday. But again, if you look at this orange line, or the orange line right here, that's your tender lead time. You see those lead times spiking well up over 3.5, almost 3 3/4 of a day, basically indicating that a lot of shippers were pushing their freight into the week after Thanksgiving. Lead times then contracted once we got back into the offices. That kind of creates this bottleneck effect of freight that's moving throughout that week. And now we're seeing tender lead times start to increase as we approach the Christmas holiday as well in Harrisburg. Allentown, Pennsylvania, a similar trend forming there. Although volume's not quite as robust out of Allentown, but either way, these markets are right next to each other, command a lot of freight, and there's going to be over a foot of snow dropping in this sector over the next 24 hours or so. So carriers definitely going to need to pay attention. Shippers out there, your service times and things like that are definitely going to be impacted by this looking forward. Looking at the tender rejection rates, we are still some of the highest in the country right now, right up over 26 and 28% for Allentown and Harrisburg. Boston, Massachusetts, 35% tender rejection rate, a huge jump, one of the biggest jumps in the United States last week. Newark, New Jersey, down there around 20% at one of the, not necessarily the highest rates, but make sure you pay attention and be safe out there today in the Northeast, and that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to your Shipper Econ Update. I'm the host and lead economist for this segment, Anthony Smith, and today we're going to go over a couple of different segments in the macroeconomy. So behind me I have job openings. So job openings just came out last week and we got some pretty telling news. So if you've been paying attention to any of the employment updates throughout the economy, we know that the initial jobless claims number was really awful last week. We had our first increase and the highest increase since mid-May. So looking at what's happening within the job openings market is going to be pretty telling. What we're seeing in the job openings market is that there was an increase to just about 6.7 million. This is a slight increase from that 6.5 million mark. As we can see in the orange here, we have retail sales for the USA. And there is not extreme, but there's a pretty significant separation between retail sales and the overall job openings. So there's not a lot of growth in job openings, but there is a substantial amount of growth for retail sales. And I don't think you have to be an economist to think that this might be a little bit concerning, because I think it might be if we're starting to see a lot more retail sales outpacing the amount of jobs that are available in the overall economy. One of the areas that we saw for the overall hires is that there is a significant amount of hires going on within warehousing and transportation. And so that is an area, of course, that is going to be booming. As we can see in the green line, we have our outbound tender rejection index, which is indicative of overall trucking capacity and availability and optionality for these carriers. So carriers' capacity is remaining very tight, and we're starting to see a pretty substantial rise in overall hires within this market. This is something that's going to likely sustain and likely stay the course in the coming months, as we're seeing an extreme boom within e-commerce and overall warehousing production or warehousing operations, as more and more brick and mortar stores or more retail outlets start to get involved in more of these e-commerce and deliver straight to the consumer operations. And so this is something that's likely going to be standing for quite some time. We did see within the quits rates, which is a report that also gets released in the JOLTS report for the job openings overall, is that the quits rate was at 2.2%. And so usually we'll look at the quit rate as something that will show and signify how confident consumers are in the overall conditions of the economy. If consumers are feeling confident, they are going to be more likely to voluntarily leave a job because they feel confident about their chances of being hired and maintain that employment elsewhere. So a quit rate of 2.2% is relatively low, showing that they are not feeling that confident in their chances of employment. Now, conversely, we did see the University of Michigan have their consumer sentiment index come out, and it is at a near pandemic high. So kind of some conflicting information here. A lot showing throughout the end of October, beginning of November, that consumers are starting to feel a little bit more optimistic, mainly around the outlook of the overall U.S. economy going forward. So that's one thing to keep in mind, is that the consumers are still feeling somewhat confident, even though job openings haven't quite returned, and we're seeing a sudden spike in jobless claims. Of course, that report's going to be renewed in the coming day here on a Thursday morning. Next up, just real quick, we're going to touch on manufacturing. In the blue line here, I have flatbed outbound tender rejection index, of course, our capacity and optionality for those flatbed trailer types. And in the green line, we have industrial production. So as expected, industrial production is flattening out and starting to really level out, and is really kind of maintaining that slower rate of growth. And so that's not too much of a surprise going into these final months, and it's really what we expected. We did see a slight bump up in some of the consumer-facing segments, like manufactured goods for vehicle parts and things like that, but overall kind of tepid and likely going to stay that course moving forward. That's going to wrap it up for this manufacturing econ shipper update. Thank you so much for watching this Wednesday edition of FreightWaves Now. As always, you can check out all of our content on all your favorite streaming platforms, including Apple TV. Thanks so much for watching.